Good afternoon. This is 3 p.m., our normal time, trying to keep life normal, right? You can tell I have a little bit of congested voice today, but didn't that sound more sexy than normal, right? But we have quite a few clients asking about deductible business meals. It's confusing. What do you mean 100%, 50%? One should be what? So this is the question was asked. So today's topic is 100% deductible business meals. So we want to tell you that it is 100% for 2022, but not so in 2023. So give you a overall view of what's going on here. All right. No responsibility disclaimers, folks, and doesn't matter how you got our knowledge. If you get it from internet, it's free. So it's really just for your reference. And don't try to do anything very serious with free knowledge on internet. It is really just a noise. And you want to really master what you are dealing with, you need to engage the professional to get that done, okay? And don't short yourself when you are making real decisions. You know, I have seen so many people are making real decisions, but they short themselves. So they didn't really do all the things they're supposed to do, then ended up paying a lot more taxes. So don't do that. All right, general guidance around deduction. So in my other webinars, I talk about the difference between tax deduction and a tax credit, right? So deduction is basically reducing your income. So therefore, make your profit less. Therefore, you pay less taxes, right? So every deduction, and it is tax saving for you. That's why you heard of people saying that, oh, you know, you should deduct your Starbucks coffee. Then, you know, there's also people saying that, oh, no, you can't. So the deduction is really just about that amount you deducted times your tax rate. Like say if your tax rate is 20%, if you have $100 deduction, that's just going to save $20 taxes, right? So IRS also said that, okay, we know you have deductions, so you will pay less taxes, but we want to make sure your deduction is business related. So when they say business related, and the IRS says that number one, it needs to be ordinary. Number two, it needs to be necessary. Necessary doesn't mean like if you don't have it, you can go bankrupt. No, necessary, it just means that it's what required by the business. Otherwise, it will impact the business in the different direction, right? So with this said, and let's go take a look. And in here, I kind of summarized your deductions into 3 categories. We're talking about deductions. In general, deductions for a business are in 3 categories. Number 1 category is the cost of goods sold. Like you use those expenses to create product and to sell. So you heard of that cost of goods sold, right? Then the other deduction is more of a capital expenses, which means those deductions, those expenses that you paid to other people, going to benefit you year after year. For example, you bought a car. That's a tax deduction, but not for the whole amount, right? So we call that capital expense. Then, of course, ordinary business expense, your personal expense should never show up in business. I know as a business owner, you will say to me that, Ying, I have no life other than work. What do you mean my personal expense? Give me an example. Well, I can give you an example. For young mother, you're running a boutique for a nail salon. I don't think you should have diapers expense in there. That's for your babies, right? So, but of course you can argue with me, goes, no, in our bathroom, we actually have a baby changing table. We prepare some diapers there for our client. Fine, good argument. But how many diapers would you charge to the business? Maybe a $20 for the business. You can't be charging $20 every week because the baby diaper, your baby's changing diapers all the time, right? So that's what we mean by personal expenses, just not related to business. And that should not be even in the business. And I tell you this because, you know, people not thinking about what's going to happen if they did that. they're always thinking that, well, not everybody getting audited, so I might just get lucky. I'm okay to deduct that, and I will just let it slide. And you can do that, but you know, once you get audited, the paying back time is a big time. If you owe IRS $100, you're going to end up paying them $125. So it's really, after all, it's not worth it. And the stress, the thinking of you are doing it wrong and you did it wrong, that thinking really tortures the mind. So I always say that, you know, just you don't even go there. If you truly are serious about your business, you want to grow your business, you want to do everything correctly. And doing everything correctly doesn't equal to paying a lot more taxes. No, it's not like that. Doing everything correctly is by the book, by the guidance, and make sure that you utilize all the tax benefit before you submit your taxes. Maybe that means you need to engage professional folks to help you with, but just my 2 cents, because I've been in this business for 20 some years, I really don't endorse shorter visions. And I think everybody coming into business, if you're not growing this business to be to the stage of my 10 a.m., if you're not growing your business, that's a shame. Because you at least want to grow to 10 a.m., then you can sell it in 2 p.m. So that's my third book called Appointment Within at 2 p.m. And I will write about, you know, when we grow business, you just have 2 ways. You either make it bigger, then your children take it over, or what? You sell it, right? So how do you sell it and how to make it? And even when you sell it, people would look at your expenses. They want to know how good of accounting you're doing. So everything, it just need to be up and up. And I know it's easier for me to say, but if you engage yourself with a firm like Community CPA, we will guide you to that route. And instead of having you be out there doing what you think is right, but not right, right? All right, so business meals should still have a business purpose and involving dining with current or prospective customers, clients, suppliers, employees, partners, professional advisors. You know, one of my partners at Community CPA, and he said, his name is Dan, he said, there's only 2 kinds of people in the world: Community CPA clients, and potential clients. So he's like simplify the world, right? So if he goes out to eat, I think he is qualified for business meals because they're just either clients or prospective clients is right here. The food and beverages should not be lavish under the circumstances. I mean, if you live in Midwest, where did you get lavish dinner? There's no place to go. There's nothing lavish. It's just normal, right? But of course, if you live in Washington, D.C. and a California big city, oh yeah, there's endless lavish waste. I don't think most of my clients doesn't belong to there, so I'm not worried. My clients are all hardworking entrepreneurs and trying to save for the next generation. We don't do lavish game, right? You or one of your employees must be present when the food, beverage are served. So what that means is you cannot be like saying, oh, that's a business meal. Your employee is not there. You're not there. And you know, that doesn't even make any sense. So they're saying that to qualify for business meal, you must have a purpose and you must be ordinary, not lavish, and you must be around. That's reasonable, right? Business meal expenses 100%? Absolutely. 100% for 2021 and 2022. If you haven't really filed your 2022 business tax return, please look at your meal expenses. Make sure your tax preparer did not accidentally make it 50%. As part of the Consolidated Appropriations Act in 2021, the deductibility of business meals is changing. Food and the beverage will be 100% deductible if purchased from a restaurant, okay? So that is end on December 31st, 2022. This temporary 100% deduction was designed to help restaurants, or many of those restaurants has been hit really hard by COVID. It is an encouragement for restaurants to come back. And this includes high-end restaurant and the beverages for business purposes. So when you cheer, make sure you cheer for a good deal, right? So that's business purpose. The food does not need to be consumed on a restaurant premise. They know, the government knows that back in 2021, 2022, some of us still a little uncomfortable to go to the restaurant. So we order, we take it back. So those are also qualified for 100%. Tax, tips, delivery fees, sales tax are all included in the amount. 100% deductible, folks, for 2021 and 2022. All right, new in 2023 though, the business meal expenses revert back to pre-Consolidated Appropriation Act level. So that means it went back to 50%. Most business meals are now, okay, we're talking about 2023, 50% deductible. And the most entertainment expenses are not deductible at all. We're reverting back in year 2023. Examples include business meal with clients, food item for the office, meals while traveling for work, meals at a conference. Those are deductible, but 50%. All right. Business meal expenses in 2023. So some expenses still qualify for 100% deductions in 2023. Don't you want to know that? So those are food provided to public to promote goodwill. For example, I have seen a law firm setting up a barbecue hot dog stand outside their parking lot to treat passbys and their customers. They send the email out to the customer, goes, hey, we have a, hot dog party outside. And so those are promoting goodwills of the company, 100% deductible. There's also things that are deductible is food for events in support of charitable cause, right? Purchase food and for homeless people and in support of charitable cause. Meals that are an essential part of your business function. For example, when you have a certain project that you require employee to stay at night to finish that, and that would be 100% deductible because you need to cater that food into the workplace so employee can do that for you, employee can finish the job. Meals sold to client or customer, of course, is deductible. Meals for employee under certain condition, that's kind of covered you here. So let's take a look at the next slide. You can generally deduct only 50% of cost to furnishing meals to your employee, generally speaking, okay, 50%. And the minimum fringe benefit, like in office coffee and snack, do not fall into the category of meals. So don't even bother with those ones. Like if you provide coffees and snack bars in the office, so your employee don't pass out while working too hard. And those are business expense. You don't need to count that as 50%. There are certain examples where you can deduct the full expense. Number one, meals whose value you already included in their wages. So for example, if the employee eat at the restaurant, but the restaurant owner already deduct the meal out of their payroll check, of course that meal is deductible, right? Meals you furnish to your employees as part of the expense of providing recreational or social activities like holiday parties. And those are fall into, those do not fall into the category of meals, and it is deductible, okay? You can deduct the full cost. Meals you furnish to your employee at work site when you operate a restaurant or catering service, those are 100% deductible. Meals to employee for convenience of the employer, okay? That is 100% deductible. Per diem meals are 100% deductible. This is something that I want to mention. You know how as a business owner, you can actually decide on the per diem amount. For example, like, if you have several branches in your business, the employees are going from one branch to another. If you reimburse that mileage and that, then you reimburse that mileage and, those this is not a good example, but if you reimburse meals, actually, it is actually 50%. But if you give them a fixed amount, say $20 a day on the meals, and it is a per diem amount, then that's 100% deductible for employer, for you as a business owner, and your employee don't have to report that as a benefit. Okay, so consider that to be something that you do, so you don't drag your employee into tax, pay the fringe benefit tax. All right, so example 1, you take your favorite client to a wonderful dinner to discuss business. Deduction. In 2023, if you did that, 50% of the cost can be deducted. But if you did that in 2022 and 2021, it's 100%. Example 2, if you go out for a meal with a client with no business purpose, you two just start dating. Okay, not allowed, but just in case that happened. And 0%, folks. Okay, 0%. Don't let your boss know that you're dating a client. That's not good. And the business entertainment expenses like a sporting event or tickets to a show are still non-deductible. Okay, cannot deduct that. But you can separate your items. So part of it is a ticket, part of it is a meal. Then the meals goes with which year, right? 2021, 2022, 100%, 2023, 50%. But if you spend money for team building activity for employees are deductible, including purchase of ticket, 100% deductible. That is something, I mean, a lot of professional firms are utilizing this. So they have these Christmas parties or team building activities they are doing, and they would deduct that 100% out of the business profit. All right. Other business meals and entertainment expenses, you can deduct the cost of meal entertainment you sell to the public, including use of facilities. This is, again, actually going back to the point that you cannot deduct your cost if there is no general public purposes. So like the law firm who did the hot dog stand, if anybody walking out of the street gonna eat the hot dogs, they would be able to, because they don't have to be their client. They can just come in to eat hot dog, right? So you want to make sure that you can sell to the public. Public are actually equally enjoying that. Then you can deduct. You can deduct the cost of providing meals, entertainment, recreational facilities to general public as a means of advertising, promoting goodwill in the community. And this is more like, if you have a good cause. We have a client who runs a skincare clinic. So in the summer, they would set up a booth in the local event and to help with taking away the tattoos. If you coming over, don't like the tattoos on your hand, you can go. So when they do that, everything is deductible, right? So you can deduct expense directly related to and necessary for attending business meeting, conventions and stuff. So this is more like if you travel out of town for training or for Chamber of Commerce event, absolutely, you can deduct that. The final reminder, folks, it is to update your chart of account. You know how in accounting, when we book the restaurant meals, and you would book that to a category called meal and entertainment, but you need to separate that line. You need to have two. One is 100% deductible. The other one is 50% deductible. Based on what you learned today here, you want to have two lines for meals and entertainment, because otherwise your tax preparer just going to take the whole number and do 50%. Because remember, your tax preparer not going to imagine that all of these are deductible meal and entertainment. They don't know. They don't know how you spend those money. So you need to separate that for them so they can give you more tax deduction. Makes sense, folks, right? All right, last but not the least, our website, and this is a free Zoom webinar for you at 3 p.m. You can email Catherine at communitycpa.com and call our number. We open Monday to Saturday. Oh yeah, you have not met any CPA firm open on Saturday, have you? So get used to it, because we always open on Saturday. If you call our number, someone will pick up the phone And Saturday is our normal day. We have two teams. One works Monday to Friday. The other one works Tuesday to Saturday to cover our 6 days a week. All right. I will see you again. Please subscribe to our YouTube channel. I'll see you again on Saturday. Hopefully my COVID voice will be gone on Saturday. I'm pretty sure it will. I'll talk to you. Bye-bye.